De-dollarization.
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 De-dollarize.
De-dollarization.
De-dollarization.
Imagine waking up in a world where US dollar is no longer the king of global trade and countries bypass it for other currencies. What would that mean for America's power, economy and influence?
Don't ask! For God's sakes, don't ask! All right.
Stay with me as we are diving into some fascinating real-world examples and explain the global shift. For decades, US dollar has been world's reserve currency.
In 1944, with World War II coming to an end, the Allied nations met at Bretton Woods, New Hampshire, to create a new financial system which would stabilize the world once the war ended. With America poised to enter a golden age of prosperity, the US dollar was chosen as the world's reserve currency.
Nearly 60% of global foreign exchange reserves are held in dollars. Countries trade oil, gold, and other essential commodities using dollar, making it the backbone of global commerce. Now think about oil. It is priced in dollars, regardless of whether you are buying it in India, China, Europe, or any other part of the world. This system creates demand for dollars, benefiting US by keeping its cost of borrowing low. You may also view my video on why dollar is global currency. I have mentioned the link in the description for your convenience. So what happens if countries start trading commodities in other currencies? The demand for dollar declines, weakening the US grip on global financial system.
You don't honor the dollar as your world currency. Is that right? You're not going to do it? No, we're not. I said, that's okay. I'm going to put tariffs all over your product.
Before moving forward, please do consider subscribing to the channel if the subjects of business, finance, and economy are of your interest. Many countries are now actively reducing their reliance on dollars, or at least have started thinking on those lines.
Relatively speaking, that translates to around 61.8% of FX reserves in total in 2020. Remember, very early days of the pandemic, and that translates to 58.2% by the end of June this year. Comparatively, the euro share of reserve holdings fell by around 30 or so basis points, and the share of the Chinese yuan and the Japanese yen, they raised their shares by marginal levels, 13 and 10 basis points respectively.
Why? Let's find out. First and foremost is sanctions. The US frequently uses the dollar-based financial systems to impose sanctions. For example, their sanctions on Russia have pushed it to trade in rubles or yuan of China. Iran has been under sanction for years.
The problem with what we have with sanctions, and you're losing Iran, you're losing Russia. China is out there trying to get their currency to be the dominant currency, as you know better than anybody. All of these things are happening. You're losing so many countries because there's so much conflict with all of these countries that you're going to lose that, and we can't lose that. So I want to use sanctions as little as possible.
Now the second reason is geopolitical tensions. Countries like China and Russia are promoting alternative currencies to reduce the dependency on US. For example, in 2023, China and Brazil announced that they will settle their trades in their own respective currencies rather than in dollars. Now this is a significant step, especially when you consider the economic size of both the countries. You may also like to view my video on impact of de-dollarization on India. The link is attached in the description. Do you think de-dollarization is a passing trend or a seismic shift in global economics? Let me know your views in the comments below. If the dollar's dominance declines, US faces three significant challenges. First is higher cost of borrowing. The US borrows extensively through treasury bonds. Reduced demand for dollars could lead to higher interest rates. For example, in 2023, the US total debt crossed over $33 trillion, with foreign investors holding a large portion of it. So if they shift to other currencies, US will have to offer higher returns to attract investors. Second is the inflation risk. The dollar's dominance helps the US to import goods cheaply. A weaker dollar means imports become more expensive, leading to inflation. Imagine a scenario where US has to pay in euros or yuan for critical imports like electronics or raw materials. Costs could skyrocket, hitting the US consumers. The third is loss of geopolitical influence. The dollar's dominance isn't just economic, it's political as well. It allows US to enforce its policies globally. A reduced reliance on dollars limits this leverage, like Saudi Arabia considering accepting other currencies for its oil. And this undermines the petrodollar system, a cornerstone of US's geopolitical power since 1970s. I hope you would have subscribed to the channel by now. Several countries and institutions are exploring alternatives to the dollar. China's yuan. China has signed bilateral agreements with many countries to trade in yuan. For example, their Belt and Road Initiative has encouraged the partner nations to trade in yuan, reducing the dollar dependency. The other one is BRICS currency. The BRICS nations, comprising of Brazil, Russia, India, China, South Africa, and few others, are discussing a shared currency for trade. If successful, this bloc can challenge the dollar's dominance, given their combined economic power. Third would be cryptocurrencies and other digital currencies. Central bank digital currencies are gaining traction as countries explore digital alternatives to traditional currencies. Of late, China's digital yuan is already being piloted for several transactions with other countries. De-dollarization isn't just a political or economic shift, it's a transformation that could affect everyone. A decline in dollar's dominance could mean higher inflation, slower economic growth, and rebalancing of global power. For Americans, it might translate to more expensive cost of living. For the rest of the world, it is more about gaining financial independence from the US influence. If you found this discussion insightful, please do like the video and share it with someone who might need to know. You may also write to me on my mail ID, which is mentioned in the description. Be inspired, keep building.